afternoon, and thank you for joining us for this lunch briefing on the future of carbon markets at Bloomberg Green at COP28. I'm Patricia Torres, and I'm the Bloomberg's Global Head of Sustainable Finance Solutions. I'm thrilled to be here with you today and looking forward to discussions to come. So before we begin, I would like to take a moment to acknowledge our presenting sponsor, Standard Chartered, for making this session possible. Now, let's dive in. So please join me in welcoming Liane Randolph, Chair of the California Air Resources Board, for a discussion on the state of emissions trading systems. So let me start by actually sharing a couple of data points on the compliance markets. Liane has been with the program since 2012 and the chair since January 2021, and it's a pleasure having you with us. So there are more than 30 compliance markets around the world. The total value of the compliance carbon market is expected to top $800 billion this year. California's carbon and cap and trade program is one of the largest multi-sectoral emissions trading systems in the world, with an estimated market share between 8 and 10%. This program is central to California's ambitious goals to reduce anthropogenic greenhouse gas emissions 85% below 1990 levels by 2045. It covers 80% of the state's emissions. The first auction happened in 2012. Maybe you were there at that first auction. And California's cap and trade program is linked with the Quebec, Canada, and joint auctions happens every quarter. And it has generated more than $24 billion total revenue that is being used and leveraged to implement programs that further reduce greenhouse gas emissions and also target environmentally disadvantaged and low-income communities. So for those of you in the audience that are probably not very aware about what the market is about, the compliance trading market, can you please start by explaining that?
Right. Thank you so much for having me. As you mentioned, the cap and trade system covers 80% of emissions in the industrial, electricity sector. In California, covered entities comply by purchasing allowances or by using offsets. The amount of offsets that can be used for compliance is actually capped by statute. And so we at the Air Resources Board can't modify those percentages. But we do have regulatory authority around setting the cap. And the cap declines over time in order to meet the ambitions set forth in the program. And we also have the ability to determine the allowances that are in the system. We have a very complicated system around distribution of free allowances for trade-exposed industries and for utilities and for the state that we use for our, we use the funds that are generated from the auction of those allowances to fund our California Climate Investments Program. And I'm sure we'll have an opportunity to talk a little bit more about those investments.
So I think my first question has to be, is it working? Are carbon emissions reducing in California? And do you think it's due to the program?
So the first answer is yes. Carbon emissions are going down in California as GDP has gone up since the climate legislation was originally passed in 2008, and then the cap and trade program began in 2012. But I think it's important to recognize that the cap and trade program is part of a portfolio of strategies that California is using to reduce emissions. And that portfolio includes direct regulation. An example is the electricity sector. Senate Bill 100 requires the electricity sector to move to 100% zero carbon retail sales of electricity by 2045. And so that has a very clear mandate, and the legislature recently adopted some interim targets on that way to 2045. So that's an example where not only are energy companies covered entities, and they also need to be thinking about their cap and trade efforts, but they also need to be figuring out how they are going to reduce the carbon that they are emitting as part of their portfolio of resources. So they need to be acquiring solar, they need to be acquiring wind, they need to be acquiring battery storage. In addition, we have very rigorous standards to get the entire vehicle fleet to zero emission. Everything from light duty all the way up to heavy duty vehicles. Our light duty target for new vehicle sales is 2035. Our heavy duty target is 2036. So these all work together, and the cap and trade program really helps kind of that cleanup, as we say. The program is a lever that we can use to drive down emissions and increase ambitions by lowering our cap, and thus stimulating more investment in reducing carbon.
So versus the 1990 levels, where are we today?
So, I don't know. Actually, I don't know that percentage number. That's a good question. I have the chart in my head. It was interesting because if you watch the pandemic, there was a huge dip, and then you saw it come back up in 2021. But our anticipation is that will sort of continue to go down, so
maybe I can pivot it for 2030. What's your target for 2030?
So we recently adopted an update to the 2022 scoping plan, which is sort of our overall plan to reach that 2030 target. So currently, the scoping plan lays out a suite of measures that would get us to 40% below 1990 levels by 2030. However, if we want to get to carbon neutrality by 2045, getting to 40% below 2030 levels, which is our statutory target, that is in law. But in order to comply with the other part of the law, which is that we need to reach carbon neutrality by 2045, if you look at the trajectory, if we are at 40% below 1990 levels in 2030, we are not on track to get to carbon neutrality by 2045, which means that we need to think about being more ambitious between now and 2030. And one of the ways we are doing that is by undergoing a rulemaking, examining the current cap and trade program, and looking at ways to make it more stringent. We have released modeling that takes a look at what it would mean to do the 40% target, which is sort of our business as usual, but also what it would look like to do a 48% below 1990 levels target, and what would be necessary to do a 55% target. And so we did some analysis, and we've held public discussions in a kind of workshop format talking about all those different options. We are just starting this process, so I can't tell you how it's going to end. It's really about kind of having that conversation about the important issues that we need to consider in looking at each of those potential targets and adjusting the cap that would meet those targets, which would then have an effect on the allowances that are in the market.
So we always talk about the carrot and the stick, right? Mm-hmm. So the carrot about the permits and making sure that if you're emitting less than the permits, you can actually sell them and trade them. And the stick is if you're not doing your job, at some point you're going to pay the price. And the price will be higher and higher and higher. So one of the questions that people care about today is what is the carbon price and how many companies have an internal carbon price today in their balance sheets. So what is the carbon price in California?
So our floor price is $22. Our last auction allowances went for $35.
And how has the price changed?
It's for the most part steadily gone up over time. There have been a few dips where there has been sort of dramatic interruptions in economic activity, like the pandemic. There was a dip during the pandemic, but it has come roaring back since then, and it has increased quite a bit since then.
Yeah. So our Bloomberg New Energy Finance, they write research on the carbon markets. And they share that 58 million allowances were sold, which means $2.5 billion revenue came into the pockets of the California state. Do you believe that the price is aligned with Paris Agreement? So everybody knows that 1.5 is going to be difficult if we don't act soon. So is the current price aligned with 1.5 in California? And I'm just going to say that the Bloomberg New Energy Finance believes that, so there was an actual, like Stern and Stiglitz mentioned that for the prices to be aligned with Paris Agreement by 2030, the price has to be between $50 and $100.
So because cap and trade is sort of part of that portfolio of strategies, there are costs of carbon that show up in other programs. For instance, our low carbon fuel standard, which applies to transportation fuels. And so there is a cost to the transportation fuel companies for complying with that. And so they need to kind of build that into their sort of carbon budget, as it were, right? I mean, they need to be thinking about what their cap and trade compliance is and what their low carbon fuel standard compliance is. So for us, we don't necessarily sort of think of it as just the cap and trade price. That's a big piece of it, but we also need to be thinking about other aspects of the portfolio.
And just for reference for the audience, for 2030, BNF estimates the price in Europe to go high as much as 150 euros per metric ton by 2030 from 85 euro tons as of today. But I actually like to focus now on impact, because one of the things that it's really peculiar about the program is that you get this 2.5 billion revenue and then you're actually using that money for greater goods, not only for the planet, but also for society. We may have around 3 minutes left, so I wanted to squeeze 2 questions, if I may. So the first question is, which projects are you implementing and using the money for? And then the second question is, work at COP28. This COP28 is about the COP for action, COP to action. So I'd love to understand is which actions are you taking forward in 2024 in the last 2.5 minutes?
Okay, so I guess I can use one example that will answer both of those questions.
Super.
So we use the funds for a wide range of projects, including providing rebates to utility customers to lower their energy costs. And one of the areas where we invest quite a bit of the funds in is incentives for zero emission vehicles and infrastructure. And to me, that's a wonderful strategy because it aligns with moving away from fossil fuels. It aligns with our strategies around reducing demand for fossil fuels. So a lot of what we use those funds for are ways to reduce demand for fossil fuels and ways to make the transition more affordable, particularly for low-income residents or disadvantaged communities, because we know this transition is going to cost a lot of money. That is why it is so important to see the investments in reducing carbon. But we see an opportunity in driving some of those investments towards low-income communities to help them make the transition.
So I still have time then
to
ask another question. So in the last minute, so we have other countries have expressed that they will also like to also issue their own compliance program in their own countries. We're talking about India, Brazil, and others. You were there from the start, back in 2012. You were there launching the first auction. Which advice could you give them for anyone that is starting and pushing that, compliance program?
Yeah, well, the Air Resources Board, when they began the program, really started by looking at existing market programs in the US and in other countries and really tried to understand how those programs were structured, what were the covered entities, how were the auctions structured, and sort of did a lot of analysis and investigation before constructing the program. Now there are, because there are so many other trading systems out there, there's really an opportunity to dig in deep and understand some of the nuances and some of the, some programs cover only limited portions of their industrial sector. Others are more wide-ranging. So sort of taking a moment to take a good look at the landscape and understand kind of what the pros and cons are is, of how to structure each program, I think is a really important first step. And I know, our staff spends a lot of time with other jurisdictions, and we've built partnerships literally around the world to talk about emissions trading systems, and we're always happy to help jurisdictions that are interested in starting up.
So fantastic. I think finishing these with the SDG number 17, which is partnerships and collaboration, I think is great. So thank you so much for joining me, Liane.